ideas to technically expand your financial situation. I know it's, as Jocelyn said, it's not easy during these times to find the best scenario, I would say, to take it from there. But I will give you some tips, and I will go as fast as possible to deliver some content that I've prepared, and to leave the floor for questions at the end, so that at least we can cover all the aspect. I would say during the next 30 to 40 minutes. So to leave the floor for the questions at the end. Technically speaking, I've been working in this field for the last 20 years, and I've seen a lot of changes in the economy and in the situations. However, there are some core basics that we technically see are always repeating themselves. So to start with, definitely the concept of finance or personal finance, family finance is a big taboo. So we don't really discuss this with everyone. And unfortunately, you can see a lot of diversion between or different opinions between different people, even within the same family. So if you ask the same members of the family about how they deal with the money, you will see a lot of contradiction and a lot of ups and downs, and nobody's really aligned on what is the best way to make money, to save money, and to invest the money. So this is the first problem. The second problem, it's as I said, it's a taboo, so we don't really discuss it with a lot of people. And unfortunately, you will see a lot of people in the field who are maybe in one part of the field, so they technically try to sell you one solution, which could be good, and at the same time it could be not really aligned with what you want or have. So that's why during the session I will tackle the concept from different angles to see in bullet points what are the essentials of this topic. Because especially now with the online, you see a lot of trends and invest here, invest there in crypto, and I don't know what. So there's a lot of things happening. So let's, I would say, get back to basics to define things. And from there, we will technically get the best out of it, hopefully. So I will share with you this presentation to go step by step. The main purpose of this session is definitely to make the best use out of our income, because whether you are employed or you are a freelancer or you are a business owner, in the three cases, you have a certain income at the end of the month or at the end of the year, and you need to see what's the best outcome, especially that, unfortunately, we are going through a very tough season in terms of devaluation of the currency, capital control, which is happening and was just declared, and there's a lot of things happening. So there's no clear way of how to deal with things, but we're going to go to the basics. I hope the questions won't be targeted towards the situation, because nobody has a clear vision about the situation. But let's direct it into the basics of how to deal with money and how to build a better future disregarding what is happening. So to start with, so we will talk about how to reduce the expenses without affecting the standard of living. So this is one point, because if we don't reduce expenses, technically we cannot be able to save money. And then when we start being able to save money, so how much to save for the short, medium, and long term, and how to split them, and for what purpose, and how much to put in each account, how much loans we should have, what insurance do you need and what options are there, how much to invest and where, how to increase the income opportunities, how much to spend on entertainment. We're going to tackle also the concept of how to sustain your income and retain your assets, and how to transfer the value or the wealth to the family without losing value. And of course, some family tips for those who have families. So if you have any question, please also, if you can put it in the chat and we can discuss them at the end. So rule number one to have a better financial situation is, it's like when you go to the dietitian and you want to lose weight. So step number one is to know your weight on a regular basis and to log your calories in and out to know how much really, what are you spending on what, and how much, and all these details. So most of the people stop here. So this is where the problem begins. Most of the people, we don't have in our culture the concept of logging our expenses. So, and this is the main problem, because if you don't log your expenses, you will never know where you are spending your money. And if you don't know where you are spending your money, you will stay in the same vicious circle. So where to log your expenses? Definitely not on a paper. So step one is to keep every receipt you have, and step two is to log them down into certain mobile application. There are tons of mobile applications out there already on your mobiles, or you can download them. You can put them on Excel, any tool you want. The important is to have it as a digital system to log, to be able to do the step two, which is categorizing your expenses. So for example, you might go to the restaurant 10 times per month, and every time you might be spending 5, 10, 20 dollars, or dollars, or the Lebanese pound, whatever. And at the end, you need to know how much you spend in a restaurant, so, or in coffee shops, okay? How much you spend on supermarkets, on pharmacy, on personal care, schooling, etc., etc. Most commonly, people know the big numbers, so they know how much they pay for the car loan, for the house loan, for the rent, but maybe for the school, but they don't have a good idea on how much they spend on parking, how much they spend on coffee shops, supermarket, pharmacy, etc. And most commonly, this is where the flow is, or this is where the gap is. So categorizing the expenses under different categories, travel, entertainment, education, etc., will give you at least the best picture of where your money is going. This is step number two. And step number three, you start looking at each category to be able to understand technically if it's an investment or an expense. I will explain. If if I'm spending money on electricity, usually this is an expense. So I usually have to decrease this number. Okay, usually when you say expense, that means you have to decrease your expenses. So anything that is not an investment, which doesn't have a return, okay, on that money. So if I'm paying a phone bill, it's usually an expense. So I have to reduce my phone bills. I have to reduce the electricity. I have to reduce each and every item where I'm spending, or I'm going out for entertainment, etc. However, you have to differentiate, because, and usually you put more money into investment. So if you are investing in a business, in stocks, in mutual funds, etc., you put more money to get more return. However, you need to understand that sometimes, technically speaking, some expenses could be a good investment. I'll give an example. So if, for example, you are paying a telephone bill, and this telephone bill is going into making phone calls to potential clients to be able to sell them whichever service you have. In this scenario, it becomes an investment. So in that scenario, please don't cut the expenses. So make more calls and call more clients and try to pitch your concept or your service and so on. On the other hand, for example, if something could be, in your opinion, like an investment, like buying gold or whatever, but if this investment, you don't really need it, and you just know where to put, we don't know where to put them, or where to stock them, or where to invest them, that means you are making the wrong investment, and it becomes technically an expense. So that's why it's definitely important to really understand where you are spending the money. And from that point, you will be, and the only person who knows if it's an investment or expense is you. So if you are doing this entertainment thing, but you are into design, for example, and if you go to the mountains, or to ski, and this gives you enough of relaxation, and you'll be more creative, and you can produce more designs, then it becomes an investment. So it's only your goal to really analyze each and every payment you do to make sure that you are on the right track into spending the money in the right place. So, and of course, if it's an expense, so once you define it as an expense, you have to find ways to reduce them. This is where we can spend hours discussing this point. But technically speaking, there are always many ways, many ways, where you can reduce your expenses without technically reducing your standard of living. Because most of the times I hear people telling me, but Jad, I don't want to reduce my standard of living. I want to be in the business class in the airplane. I want to wear a nice brand when I go out. I want to hold a nice phone in my hand, a nice laptop. So I don't want to reduce my standard of living because I want to enjoy it. I'm working hard. Fine, this is very good. And the importance is not to cut down the expenses, to cut down your standard of living. But how about looking at each and every number and try to see if you can get the same thing for less money? We can go forever on example, but just to inspire you. If you like traveling and you know that you will be traveling 4 times a year, plan your trip ahead of time. You will be going to the same country, you will be visiting the same things, you will enjoy the same things, but when you pre-book your ticket ahead of time, so instead, if I want to travel in August, and I know for a fact that I'm traveling in August, I don't buy my ticket in August because the ticket will be much more expensive. So I buy it maybe in January. Okay, so, or maybe 1 year ahead of time. If for sure I'm gonna take a vacation in August and go to Italy, then book your ticket ahead of time. Okay, try to negotiate, for example, with some suppliers. So if you get more tickets, for example, maybe they will give you a discount. Okay, so there are special offers online, either for clothing, so you wear the same brand, but you get it in this discount phase, in the sales. So there are so many ways in each and every type of expenses, not in all the expenses, but in most of the expenses. Even, for example, with the telephone, okay, there are packages, there are bundles that you can buy where you speak more time, you use more internet for less price. So there are a lot of ways we can discuss later on, but just to make sure we cover all the topic, where you can get the same thing. So you wear the same clothes, you eat the same food, you travel to the same places, so you keep your standard of living, but at the same time, you do it for less money. That will not harm your standard of living. It will make you enjoy more and more whatever you're doing. And at the same time, you will save more money, so you can do more of the things you like. Okay? So this is I would say part one when it comes to reducing expenses, again, in summary, in bullet points. Now, after being able to reduce your expenses, and by the way, if you don't find the way to reduce your expenses, just ask, just go online, just Google it. You will find ways. Okay, so I can go forever on giving you tips on how to reduce each and every part of the expenses, but you'll be surprised how much tips you can find when it comes to the lighting, changing to put LED lights instead of regular lights, changing the iron to 800 or 1000 watt and then instead of 2000, so it will have less energy consumption. The list is really ongoing, but this is just to inspire you. So the second part is to save money, because if you don't save, then you will not be able to later on, and we will discuss this, you will not be able to invest. So one of the common mistakes when it comes to technically saving money, the first mistake is people tend to save money after they spend. So they say, okay, I'm not being able to save money. Why? Because nothing is left. That's the first mistake. You cannot spend and then save. You have to save and then invest. Now, this is an ongoing dilemma, and this is something that's it's a big debate where people say that, but okay, I want to save money, but okay, if I save X amount this month and I end up not having enough money to spend, what do I do? Well, it's not easy to do that, but that's why you need to have a clear budget. That's why you need to clarify your expenses. That's why you need to categorize them to be able to spot where you can save from. So if I can save, I can give you again hundreds of examples, but if I can save money from the parking spot, money from the coffee shops, even if 5%, 10%, they will accumulate depending on your income and depending how much you are spending. They will accumulate into a certain number. So once you, for example, if your income was X and your company tells you it's now, we're sorry, but we're gonna deduct 10% because of the situation, what happens? You're gonna deal with it. You're gonna find ways to deal with 90% of your income. So do the exercise yourself. So cut 5, 10, 15% of your expense of your income and put it on the side. And this is still yours, but in another account. And when we say in another account, it could be in the bank, or it could be at home, or it could be somewhere else. The point is to have it in a separate account, and you have to split into, generally speaking, into three accounts. There's the short, the medium, and the long term. And this is very important to note, because if you don't split them into technically different categories, you will fall into the problem of saving more money. And then when you have more money, you they will always find a way to disappear, either because of an opportunity or because of an emergency. Something always happens. We've never seen 1 year in our life where nothing happens. It's always either the crisis or the problems or the economy or a medical issue or an opportunity or the car issue, or and if nothing happens, your friend goes into problems, or a relative goes into problems, and because you have the money, so you end up paying for them, and so on and so forth. So the thing is, you have to really take away part of the money and put it in first in the short-term account. The short-term account is an account that you use in two cases, either for big emergencies or for technically for interesting short-term opportunities. Okay, so but mostly it's for emergencies. Now, how much to put in this account is the question. Again, there are no fixed rules in this, but I can give you some best practices. The best practice is when you calculate exactly how much you are spending per month. So just to round the figures, if you are spending $1,000 per month, okay, so the minimum you should have in your short-term account is technically 3 times your level of expenses. So that's $3,000, okay? And the maximum, if you are very conservative and you are very scared, you put maximum 24 times your monthly expenses. So for somebody who is spending $1,000 a month, you should have minimum on the short-term account 3,000 and maximum 24. Anywhere in between, you are in the safe zone. Now, for the people who have investment opportunities, who have a big number on hand, and so on, better to move to the medium account and not to keep a lot of money in the short-term account. For those who are conservative, some people are more scared and they are more concerned about not having enough money in the future. In that scenario, better to keep less money in this account and to move to, to put more money in this account and to move to less opportunities. So, but not having at least 3 months your monthly expenses, you are in a danger zone, you are in a red zone, because something could happen. You could have a delay in payment, you could have delay in your income, you could have a delay in anything, or something could pop up and you might end up losing your job or not having enough money to pay your bills, and this could put you at risk. Now, if you have at least this number on the side, in the short-term account, you can move to the medium account, or actually let me start with to move to the long-term account. Long-term account is technically things that you could use for the long term. Most commonly, when we think long term, we think of retirement. Most commonly, we think of education of the kids, and most commonly, we think of big projects that you have on mind, like a dream project that you have in mind, going around the world, getting your PhD in the university for I don't know after how many years. So these are the big projects that you usually dream about. So these go into usually the long-term account. Now, how much to put there? Again, there are no fixed rules, but the best practices are, I would say, not less than 5% of your annual income, and logically speaking, not more than 15%. So I would say the average is 10%. Anywhere in between is a good number. So between 5 to 15% of your total income, not expenses, goes to this account. Now, after putting the short term and the long term in place, now comes the role of the medium term account. Now, the medium term account is depending on what is remaining from the savings. And usually, you put it, the intention of the medium term account is for the big goals that you would like to achieve. Big goals like changing your car, big goals like changing your house or upgrading your house, big goals like continuing education, big goals like, I don't know, maybe traveling, so maybe opening your own business. So it could be anything that is, I would say, 5 to 10 years span of time, where so you save, for example, to afford a down payment for a new house, or you save for a down payment for a new car, and so on and so forth. So these are the goals account. So this is the medium account. Okay. So this is when it comes to savings. And again, please don't mix them. If you mix them together, you end up technically losing your goal, which could be the retirement, the education, the car, the house, the business, etc., or even the emergency fund. So don't mix them. Make sure that each and every account is treated differently, maybe in a separate bank, maybe in a separate drawer, safe at the house, whatever you want. Just don't mix them. Moving from here, of course, also you need to make sure that you have limited loans, because of course we all know that loans have been previously promoted. Now you don't have the luxury of having loans anymore, but for those who already have loans, loans have been well promoted, they've been well marketed to harass our standard of living in a way or another. Sorry to put it this way, but we've never, if we go back in time, like to the previous generations, they've never bought cars using loans, they've never bought houses using loans, they've never traveled using loans. So the concept of loans invaded our lives, and this was part of the problem that we faced. It's not all of it, but it's part of it. So you could see each and every person spending from the credit card, taking a personal loan to travel, to change the nose, to make some operations. I'm not against, but I'm just saying that we took an overdose of loans that put us into the situation that we ended up with. Again, that's part of the problem. So making sure a credit card is not wrong. It's not wrong to have a credit card. What is wrong is to spend regularly using the credit card without making any calculations. So a credit card, for example, to have it as an emergency fund is good. So having a $3,000, $4,000, $5,000 credit card, so that if you go to a hospital and they tell you have to pay a down payment and you don't have that down payment or deposit, so you use it, that's fine. Having a credit card to travel, so you pay it once, you benefit from a certain discount, and then you pay back to the credit card, and once you refill it, you travel again, it's acceptable. But what is not acceptable is to not calculate whatever you are spending with your credit card, and you start just using it, because many people now left the country or are planning to leave the country, unfortunately, and they go to countries that are technically economically safe. And whenever you reach there and you get your residency, banks call you. They tell you you can, based on your income and based on your situation, we can give you X amount of credit card, X amount of personal loans, and people feel amazing, so that they use a lot of those loans and credit facilities, and they end up in the same problem again. So that's why it's very important to understand that credit cards are good, but if you know how to use them and if you know how to close them on time, because otherwise you'll end up for life paying interest, and this is where they make money, and this is where you never end up making money. Personal loans, car loans, housing loans are all, again, good if they are well managed for a good purpose. So don't and usually these people tend to outsmart the system. In what sense? So if they are not eligible, for example, for a car loan, for a personal loan, because it's for a reason that the banks used to put that the credit has to be 1/3 of your income, because they know that you have other things to pay and other things to take care of. So some people get extra paper from their friend and extra paper from I don't know where to prove that they have more income. So if their income is $1,000 and they need a loan of $600, so the bank wouldn't give them unless only 300. So they go to their friends to get a letter of income so that they prove an income of $2,000. So they get a loan of 600, and then they end up not being able to pay back the loan. So it's not really something smart to do. Make sure to abide by the rules, because they've been studied for a reason. Now, also for the housing loan, because I'm going to just make a small comment here, or two small comments. Housing loans are good because sometimes to be able to save for a house, it's an unlimited, it's a very long period of time to be able to save for a house to buy it completely cash. So it's not bad to technically take a house loan. But what is wrong is two things. The first thing is to get a house that is bigger than your capacity. This is one problem. So if you are a couple, if you are a small family, if you are etc., it's okay to live in a house that is up to your standards, up to your income, up to your size of financial size, and then later on, when you can, you upgrade to another one. But if your income is $2,000-3,000 and you get a house loan that is over your capacity, that becomes a burden, and you will curse the time having this house loan because you will never be able to enjoy it because you are always paying enough bills for that. That's the first comment. Now, the second comment in this regard is rent is not bad. So I don't know why in our culture, and this is always a big debate that if we open it now, we'll probably close it after 1 week. There's always from our parents and from the surrounding that you should not be spending money on rent. Rent is not bad. If you cannot afford the down payment, if you cannot buy a house today, it's okay. You can live in a very nice house, you can rent a house, and you have the flexibility to move to another house until you have enough financial capacity to purchase your own house. It's not wrong. And maybe, just maybe, it's a parenthesis, you can use that amount to invest somewhere else. I'll give an example. If your house is worth $200,000 or $300,000, okay, and you have to pay a down payment of $60,000, and the installment will be, I don't know, $1,500 per month. And besides the fact if there are housing loans or not, that's another issue. But generally speaking, so instead of putting that $60,000 as a down payment and affording the bill just very tightly and staying all the month without being able to breathe financially, well, why not to wait on the concept of buying a house, postpone this goal a little bit, and maybe if you have the $60,000, invest it in a business or in a small real estate that could generate new money for you, and then use that money to buy a house later on. So while having the rent on, so it's again changing our mindset. It's again changing our belief system that was built up by our previous generations. Now, if you can afford, of course, buying a house is definitely a good option. I'm not against it, but don't put it as a frustration that it's a sin to rent a house. And this is usually a pressure coming from our parents. No, 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 no. You're paying this much rent. You shouldn't. You should buy the house. Okay, I can afford the rent, but I cannot afford the down payment. So what do I do? So don't fall into the previous mistakes and end up again in bad financial situation. So this is when it comes to loans. Again, in summary, we can talk a lot, but just to make sure that we cover all the points in good summary. Now, when it comes to insurances, there are 3 points to look at. Now, the first point is what is insurance? And because we have a lot of misconception about insurance. The first point is insurance is a way or a contract to cover a risk that you cannot afford. Okay, so because you hear a lot of people, insurance, why to have insurance? Or maybe they buy over insurance because they are so scared. It's the concept of insurance. Even if you have the money on the side, why to lose that money if there is somebody or an institution or an entity that could take this risk away from you? So if I have a car and it costs $30,000, okay, so why not pay $500, $700, $800 so that if my car got stolen or burned or I don't know what happened, I can afford to replace it. Why to lose the $30,000 and take it from my bank account to buy another one? No, I would just put $700, $800, $1,000 for the insurance so that in case something happens, I don't lose another $30,000 to replace it. So it's a smart thing to do and to save also your savings, because you've put your savings on the side to be able to do something interesting. not to replace a car or not to replace your home furniture in case there's a fire in the house. So if something happens to you medically, if you go to the hospital and you need a certain operation, just buy a medical insurance. So the most important three types of insurances, there are many insurances, but of course you need to have a medical insurance, because if you need to go to the hospital, we are all open to accidents, to sicknesses and so on. So you need medical insurance to technically protect yourself from losing your money when you go to the hospital. That's one. Two, of course, by default, we got all used to having the car insurance, so that if something happens, you don't lose your money, but you technically change or repair your car due to any accident that could happen. At the same time, you need the life insurance, so that in case, especially if there are people counting on you, so if something happens to you, so you need money for your family to be able to continue their education, to be able to continue to maintain their standard of living in summary. Okay, and at the same time, you need disability insurance, so that if something happens to you, you won't be a burden on somebody else. So all of these, you could just technically discuss them with your insurance agent, and you could tell them how, but the first exercise is to have your expenses well locked down to better understand how much insurance you need. Otherwise, they will technically sell you over insurance. They will sell you amounts that you don't need, and you will have the intention that you are in the safe zone, whereas technically you will be paying money that is not needed. You wouldn't need that much of insurance to cover yourself. So that's why you should make sure, and how to calculate the best amount is technically to see how much money you have to spend. So for example, again, going back to the same example, if you are spending, for example, $1,000, so for disability insurance, you need to cover an average of 700, 800, like 70 to 80% from your income, to make sure that you can pay back the car loan, the house loan, etc., without touching your savings. And if you are not here, how much is the family counting on you? So if my children are on average 10 years old and they still need me for another 10 years or 12 years, so I multiply this number of years times the amount they are spending, or we are spending as a family, and I calculate this amount and I come up with a number that is reasonable to leave for the family in case I'm not here, because we are all exposed to risk and we need to cover that risk. Okay, there are of course other types of insurances like travel insurance, liability insurance, but this is a big thing. The concept is, no matter what you do, just make sure. I personally also have house insurance, because by law, if I have a visitor in the house and he falls because of whatever, anything that happens, because of water, because of anything that could happen, legally speaking, you are liable to pay. If somebody falls on my car and I'm not now in Lebanon, for example, but my cars are in Lebanon. So if somebody falls on my car right now, I'm liable. I could go to prison if something happens there. So although it's not my mistake, but this is the law. So better to have the insurance to save your money from these problems, and to make sure that you are not really taking those risks when somebody else can do it for you. So, of course, what to look for? Definitely, you need to look for a company that is solid. Most of the insurance companies in Lebanon are good, besides whatever you hear in the market, but this is just bad marketing and bad marketing the competition. Most of the companies are good. Just make sure that they have a good credibility and they have good reviews and so on. To make sure, and which is more importantly, to read the contract, because most of the people just trust the agent or the broker without reading the contract, and then they start blaming them because I don't know what happened. So it's your duty and responsibility to read the contract and make sure that it is well covered. I'll give you a small example. You go to an insurance agent, they tell you the medical insurance is for $1,000, and you say, wow, it's too much. So they tell you, no problem, I will give it to you for 700. Ah, thank you. And maybe they just decreased the limit of the liability. So for example, you were covered for up to $200,000, and now they made it for $100,000. So this is not a favor. They just decreased your amount of coverage. Maybe they took away a certain feature from the policy. So don't fall into these fake traps. Just make sure that you read the contract compare the contract to the offer that you initially had, and you will be on the safer side. And of course, try to look for somebody who works in the field, like just like any other thing. If you are working with lawyers, with auditors, with consultants, with any kind of psychologist, nutritionist, dietitian, etc. So make sure that you are dealing with the right expert who has a good credibility and who has a good reputation. And then even if they clarify things for you, again, read the contract and make sure that the company is good, the contract is good, they are good, and you take it from there. And most importantly, pay the money directly to the company. Pay by bank transfer, pay by check to the company. Don't pay to other people, because we are in hard times, and unfortunately things could happen. We know the market, we know what could happen. Somebody could be stolen, somebody could be taking your money, an agent could take your money and go to the company to pay, and then maybe they get stolen, maybe he gets an accident, or maybe they have bad intention. Don't take the risk. Make sure that you pay, you get your receipt. Otherwise, call the company and see, claim your right. Otherwise, you will not be able to ask for your right if something happens. This is when it comes to insurances. The most important part is to use insurance not to consume your savings, which you are working hard to be able to save. Now, the juicier part is when you hopefully save money. Of course, whatever we are saying is not just something that could happen in 1 or 2 months. It's good to know them, but it's not going to happen like, so if you know them, tomorrow you will open your account and you will see a lot of money. It's going to take time. It's like I kind of give the example of your physical shape. So to get into a better physical shape, it's not 1 month or 2 months. It's discipline, it's hard work, it's commitment, it's a long-term commitment, and it takes a lot of effort and dedication to get there. Same for the financials, same for the business. It's not going to happen overnight. Don't look for quick fixes. Don't look for fake illusions. Don't look for motivational quotes that could get you there. You need to work hard to get there. It's discipline, discipline, and discipline that will get you on track to be able to make more money. It could take years and years to get there, but at least after 10 or 15 or 20 years, you will get there. Whereas somebody else will just remain where they are, or maybe they will fall down. So think long term, have a financial plan, stick to the plan. And once you start seeing more money in your medium account, so again, your short term account is for the emergencies, but you need to update it, because maybe today your income was $1,000 or your expenses were $1,000. So you put aside $10,000 in your short term savings account. But maybe after 1, 3, 5 years, you are earning 3,000, 4,000, 5,000. You left to another country, you are making more income. So you have to upgrade this account and put more money into that account. Same for the long-term savings account. And whichever is left in the middle, which is the medium-term account, you have to invest that money. So where to invest that money? Not to recreate the wheel, you have usually 3 major categories, I would say. There are tons of ideas, but 3 major categories that are reliable. One of them is the famous real estate. Now, when we talk about real estate, technically speaking, real estate is very interesting. Real estate is solid. Real estate is real estate. So it's tangible. You can see it, you can feel it, you can, whether it's land, whether it's an office, whether it's a house, whether it's whatever it is, it's there. So this is good. Now, what is the bad side of real estate? It's costly. So one, it's going to take you a lot of time to be able to save enough money for real estate. 1, 2, you cannot liquidate it anytime you want. And 3, it incurs property taxes. And 4, so it's not really easy to get or to manage. So it's amazing if you can do it. If you have some good money, this is very good. But it's not easy to do that, especially, for example, sometimes you need to rent your house, or because some people say, okay, I will buy the house and I will rent it, and I will pay back the loan from the rent. Very good idea in terms of idea, but maybe you will not find somebody to rent it. Or maybe the one who was renting it will default on the payment and you end up not being able to pay back the loan. So you lose the property. So in case you are comfortable and in case you are you can afford to pay back the loan, or you bought it in cash and so on, and you can do that, then it's okay. It's very good to have a real estate investment, because real estate, whether you purchase and you keep it, this is a safe long-term investment, especially if it's land, because land will never depreciate. It's the only asset that will never depreciate. It always appreciates. Okay. If you have office, house, shop, any kind, studio, bank, whatever. So these need some maintenance. You need to pay some municipality taxes. You need to pay to the Ministry of Finance, your taxes and so on. But the good thing about them is that you have tangible assets that you can use over the time. You can rent them. This is a good technical retirement plan if you can afford during your years to buy 1, 2, 3, 5 apartments or small studios or small shops, and you rent them for $500, $700, $1,000 per month. So you end up at the end of your career renting some properties and living from the income that is coming, which is excellent. So this is one option. Of course, don't over purchase. Don't take a lot of loans to purchase them. Otherwise, you will never be able to be on the safe ground. Now, the second thing is small businesses. Why am I saying small businesses? Because everybody wants to open the next Microsoft and the next Facebook and the next I don't know what, which is lovely. It's very hopeful. It's very ambitious, but we can put our feet on the ground and say, let's start with a small business. Now, having a small business is something very good. We're going to discuss it a little bit more in a while. But the most important thing is to start small and then to grow step by step. Whatever the business is, maybe you are now an accountant, maybe you are a designer, maybe you are a web developer, whatever profession you have, you can turn it into a business. And once you turn it into a small business, of course, you need a business plan. Of course, you need to have somehow a good market study. Of course, you need to organize things internally and to put a good marketing plan to promote your business and to get to the public. But in summary, a business, the beauty of the business is that it's less costly than having a real estate. It could employ more people, so you are creating more job opportunities. 3, you fill your time. For some people, their need is technically just to make money. For other people, they are bored at home and they want to fill their time and they want to do something with their own hands to be able to have a productive day. So having a business is really like, for me, it's like raising a baby. So it's really painful, but it's really beautiful. It has a lot of responsibilities, but it creates a lot of meaning and purpose and benefits to the community, because economies and communities grow because of small and medium enterprises. They don't grow because of the multinationals. Okay, so multinationals are great, big companies are great, but economies count on small and medium, small businesses, family businesses that are really employing a couple of people in the area, employing the children. Now we are going into difficult times, so maybe you can give this business later on to your children who can take over the business and grow it, because they will not maybe find the right job opportunities. I can speak hours on this topic, but it's very important to think of small businesses, and now you can benefit a lot from the online to promote and to make your business solid and profitable. The other part is simpler, which is the investment products. Investment products are unlimited. Currencies, stocks, mutual funds. You can also buy gold, you can buy crypto, etc. It doesn't matter what you buy. For me, I try to go into more solid things. So I personally, but this is a personal preference, you don't have to follow the same. I usually prefer gold and I prefer mutual funds because I can see them, I can forecast them, and they are somehow more safe. But some people can afford more. The most important part about all of this is to keep in mind 4 things. The first thing is diversification. So don't put all your eggs in one basket. Make sure you diversify your investment, but of course not if you have 5,000. If you have $5,000, you cannot diversify into gold and real estate and business and so on. This is it's nonsense. So you have to make sure that but if you have a bigger amount, then it's smarter to not to put them all in one place, but to have a diversification of investments so that you can diversify your risk technically. 1. Two, you have to make sure to plan things according to your personal goals. So if you are an impatient person and you like to see direct results, don't purchase a piece of land and keep it for 30 years. Purchase something that you can, or purchase a piece of land and make a project on it. Agricultural project, manufacturing project, tourism project, and employ people in the area and so on. So this is fine, but at least make sure that it is aligned with your goals, with your profile. So if you are conservative, don't take a lot of risks. If you are aggressive, at least don't just technically kill yourself or commit suicide financially. So make sure that you are somehow well balanced based on your profile, based on your timeline, based on your goals, and based, of course, on how much money you have on the side. So having said this, technically, we can move to some areas where, because some people tell me, okay, this is great, but I need to increase my income to be able to do that. So that's where I'm going to give you some small tips to increase your income. One of them is sell something. So if you sell to, sometimes you could be in a certain company where you cannot legally or ethically or whatever do another job, okay? But what you can do is sometimes to sell something else. So you can sell real estate, you can sell sales is into commissions, and you can earn more income. This is one way. You can sell unused items that you bought on the old currency and now you sell them in fresh. So you can make some difference, some recycled items, etc. So get the concept of sales in your mind, because it gets you more and more income. You can build small partnerships. Building small partnerships could be done with, if you cannot afford time-wise or experience-wise to build your own small business, somebody else is building a business and they don't have enough money to grow that business. So maybe you can give them the money, get your shares, grow together, and it's a win-win scenario for both, because they have the expertise, they have the know-how, you have the money, and together you can form a good team. So this could be something, but of course you need to study the partnership well, to evaluate the business well, to set the right expectations. This is a big topic by itself, but just to give you a tip. Another point is to work on weekends. So no matter what you do, you can always find a way to work on weekends. You can do events, you can do cooking, babysitting, you can rent your car, you can do teaching, personal shopping, yoga, design. Technically speaking, you can turn any hobby into a business during the weekends. And I know a lot of people who started making money on the weekend and then it became their career, whether it's into music or it's into website development or design and so on. And they started seeing that they've been working 180 or 200 hours per month to earn this amount. And then they are working during the week and they are making much more. So they feel enough comfort that they drop their employment and they move into this kind of business. And this is how you start growing technically financially. Otherwise, it could just remain as a parallel income and it could increase your savings and so on. You can set up an online shop. Now the world is open. You can be sitting in Lebanon and doing business in Australia. You can be sitting in Cyprus and doing business in Canada. So the world has been really open during the last 2 years. This is at least one good part of what happened. And you can benefit from really promoting whatever business online, so you can earn more income in most of the fields that are there. Maybe not 100%, but in most of the fields, you can twist your business to fit into this category. Of course, you can do a gradual transformation. This gradual transformation can start from being completely employed to having a double job. I reached a level where I used to work 4 jobs in parallel until I drained completely. So at a certain point, you understand that time is money, but you have a limitation of time, so you cannot do more jobs. So you just lose your focus, and it starts affecting all your jobs and your health and your social life and everything else. So you can move into freelancing. Wherever you are a freelancer, it's less stable, but you get more money. And there are tons of platforms online and social media and freelancing platforms that expose your skills and your abilities to be able to make more money. And especially now If you are based in Lebanon, you can earn money from outside, and this becomes having double, triple, quadruple impact on your money. I'm sure you know what I'm talking about, and a lot of people are doing that, which is also somehow good. Looking at the bright side of things. And of course, whenever you grow more as a freelance business, you can start your own small business. And whenever you have your own small business, again, you can get into more control, you can be more professional, you can have a brand name, you can market yourself better, you can employ more people, and you can systemize this freelance job into a more systematic job that could grow further and that can bring you more and more opportunities. Now, when it comes to entertainment, of course, it's important to organize your entertainment. Everybody has, probably most of the people have a passion for something, for photography, for painting, for drawing, for music, and so on and so forth. So find your passion. Once you find your passion, organize your entertainment, because some people lose their money because of a passion, because of cars, because of airplanes, because of, I don't know, music, and so on. So they spend all their savings on their passion, and they end up with no money at all just because they are passionate. Passion is good, but organize it. Make sure that it is well systematic. You set the right budget for it, and then why not to invest in your entertainment? So if you can make money from this entertainment, from this passion, if you are making music and can, I don't know, but invest and open a small studio and start maybe teaching, for example, this online, offline. You can use your room to have a small studio to do photography, to register music, whatever it is, to do websites. So this entertainment becomes a money generation. So you turn your hobby into a business. And by the way, I've been 20 years in the market. We've dealt with a lot of businesses in different countries. And I can tell you that the best businesses are those who start from hobby into a business. So because they have the passion, they have the experience, they know how to deal with it. But of course, you have to make sure to organize the business side of it, not to fall into the trap of being passionate but not earning enough money. Another tip on transferring wealth. So I'm going fast because the 1 hour is almost done. So you make sure, if possible, to register in the name of the heirs. So register the properties in the name of the heirs. Otherwise, you could be paying a lot because on average, don't take the numbers, but just as a reference, on average, if I'm alive and I want to transfer my home or my properties to my children, I pay somewhere around 6 to 7%. Don't take the numbers, it's just an indicator, but this is somewhere around this number. However, if I pass away, if I die due to any unfortunate reason, then by law, in Lebanon, you double this number. So you have to pay the lawyer, you have to pay Hasr al-Irs and all the process, and the fees become double. So definitely it's better to, instead of buying and putting them in my name, to then do the process and put them in the name of my children. And then, so why not, if I know in advance that I need to put them in the name of the children, so you automatically do this process, but you can protect yourself by putting the investment part of the things in the name of the parents. We can discuss this a lot, but this is a well-known thing for older generations. They used to do it a lot. Of course, you can use the insurance to cover the transfer of assets, because sometimes you cannot have the money to transfer the assets. So in case, for example, I have $1 million of assets, a land, a house, I don't know what, a house in the mountain, and something happens to me and my family needs to pay $150,000 to $200,000 to be able to transfer the assets, and I don't have this money. Instead of leaving it and not do anything about it, so I do, for example, a life insurance where if something happens to me, besides what I leave them for the standard of living, I put another $150,000 or $200,000 of coverage that goes directly into the transfer of property, so they don't have to pay this amount. And so this is a win-win scenario. Invest always in appreciating assets. Don't invest, for example, in regular cars, because a car, if you buy it today for $50,000, after 5 years it will be worth maybe $10,000. But if you invest $50,000 in a small shop, maybe after 5 years it will be $60,000. So it's appreciating, not depreciating. And of course, always take experts' advice, whether it's the lawyer, the auditor, the consultant, because we know how things go, and everybody can give you his technical opinion where you can do the best, because there are a lot of parameters involved depending on your nationality, depending on, unfortunately, your religion, depending on your family status, and so on and so forth. So things could change depending on that, and depending on which country you are residing. And so that's why it's always better to ask experts, but these are the main concepts to have in mind. The starting point to start having a better financial wellness, it's technically to have a shared vision for the couple and the family. And this is another taboo where people or couples don't share. We are in 2022, and some couples still don't know their husband how much, or their spouse how much they make income, or it's, for me, it's nonsense. It's a solid family must have a solid vision. Even why not the children sometimes be involved if they are at a certain age, where we have a vision of where we are going, and we set our priorities, and we communicate and prioritize our values. So to know what is more important for us, is it the house, is it the trips, is it the education, is it the entertainment? Because you cannot afford everything. So you need to set priorities and move accordingly. You have to set the human drivers, the pain and the pleasure, because if you don't know what is painful and what is a pleasure for you, you end up doing wrong financial decisions, I would say. So, of course, I have the pleasure of owning a nice house, but I cannot spend all my money on the house, because I have to pay the school, I have to pay for clothing, I have to pay my insurance. So you have to budget everything and make sure to avoid every pain that could happen. So to make sure I'm well organized. Always make sure to keep a balance in your wheel of life. I'm sure you are attending a lot of sessions during with the university now, with Antonine University, about this. So make sure to keep a wheel of balance. And because when you are well balanced, you do not make impulsive decisions. Whereas when you're not well balanced, if you are very stressed out, and you are not doing well in your relationships, and you are not doing well spiritually, and you are not doing well physically, so when you do that, you tend to be more impulsive. So you just go and buy anything, you buy any phone, you buy any laptop, just because you want to compensate for those losses. So make sure you are balanced in your wheel of life to avoid impulsive decisions and break something that you've been working for many years. Create a planning environment and raise awareness for the kids, because one child, unfortunately, can break all your planning if they are not disciplined, and if they are if you get attached emotionally, and they start emotionally abusing you into buying and getting more things. So you end up putting your savings into your children's, I don't want to call manipulation, but wrongful behaviors when it comes to some behaviors when it comes to money or to financial decisions. Main tips for the kids to have better awareness. So help them write yearly, quarterly, monthly, weekly, and daily plans. Money must be earned and not for free. So not to make it commercial, but just it's not like every time they need money, you just give them the money. They have to feel that there is something that must be earned. It's not like you're not an ATM machine, and they can take as much as they want. Help them to start logging their expenses, make sure to help them in making better decisions, like when you can get, yes, you like this thing, bravo, I will get it for you, but let's set a time for it. Maybe after 1 month, maybe after 3 months, maybe at your birthday. It's wrong to say yes to everything they ask for, and it's wrong to say no to everything they ask for. Just link it to their behavior, link it to a timeline, link it to the money they save themselves to be able to get that, so that they start saving for their goals. Make sure you engage them in a positive attitude, because when people are not in a positive attitude, they will reach a point where they will make counter reactions, and they start abusing money, the first income they make. So we know a lot of people where when they got their first paycheck, they just started throwing money everywhere because they were so frustrated. Of course, same applies to, I'm mentioning these because these are pitfalls that where it gets more psychological on the financial decisions. It's not discipline anymore, because, for example, their parents had a control over the children's future or career. So they study 4 years into something they don't like, and then they end up repaying for another 4 years for something they like. So why to spend all this amount? Because my father wanted me to become an engineer or a lawyer or whatever. So get out from this superficial old school thinking to support really the children to really do what they want, accept them for who they are, because if you don't, they will start spending money to become somebody they are not. Make sure to understand and not to limit them and to make them fearful, because again, all of these will make them abuse the money. Having the helpers in the house is also something. Again, all of these are things that we can discuss a lot, but they just get the behavior of the children of, even if you have a helper at the house, this is not wrong, but what is wrong is to make them feel that everything is technically easy to get, and so they don't know anything, so their behavior becomes very passive and they don't earn anything they want. For me, I would love my kids to wash the dishes, to support in fixing the bed, etc. Not to count on anyone to do that. So it gets them into a better mindset, because it's all about discipline and having a better attitude towards money. And of course, make it hard to reach the money. So don't put the money everywhere that is very accessible. They should, even for you, make sure that the money is in a blocked account, in a long-term savings account, in gold. So don't just make it very accessible by card. And watch out from the bad habits, because any bad habit that you get, can I put as an example, like drinking, like smoking, like etc. I know people who spend 1,500 a month on cigar, or $1,000 per month on drinking, on whiskey. It's a pity to see that because of our bad habits, sometimes we cannot be disciplined and we cannot save enough money to fix our financial life. So in summary, of course, these are the main points. I will leave the floor for your questions. And of course, if anyone is interested to dig deeper, to have a more personalized approach, of course, we can take it from there. But now I will leave the floor for you to ask any questions, and hopefully it was beneficial to you.
Thank you so much for this enriching session. We really needed such tips, especially as we all agree that we're going through a lot, so we needed these. We had people around us here in the office agreeing with everything that you were saying, so the feedback here is very good. Now they are sending you claps and thumbs up, the attendees. I don't know if anyone has any question. If so, please feel free to raise your hand and share them directly, or to type them in the chat box. I will also...
Yara, I'm sorry, I just saw the message. I was speaking fast, but I was concerned not to finish on time, so I'm sorry.
No, there are... I will also leave in the chat box a feedback survey. If you can please fill it in, and Mr. Jade, I will share with you the answers once we receive them. I don't know, does anyone have any question? I think you were very clear. I don't know if they need to know more tips or so on.
For me, it's an unlimited topic, because and it's very debatable, because there are no, I would say, rules in this regard. There are best practices, and everyone has a different perspective. So there is no right and wrong. I can give you one topic where we can spend hours debating whether, for example, giving the kids a fixed allowance per month, or whenever they need money, I give them, or I make them work to earn the money, or it's just how much to give the child every month. So just one question like that, we can debate for hours. So there's no really, or what is really, for example, the best investment. So there is no really one best investment. It depends on the age, on the timeline, on the goals, on the priorities, but it's just putting things into perspective. And so please feel free, if you have any questions, I'm open so to answer. Thank you, Marlene. Thank you, Hassan. Thank you, Rawad. Thank you, Vicky, Thomas, Cynthia, Leah, Wael, Sherbil, Rawad, Renwa. Thank you. Anything you felt is not applicable, I will ask you. Thank you, Francisco, Tagreed. Thank you, Bilal. I'm not a doctor, by the way. Thank you, but I'm not a doctor. Great, thank you, Danny. Anything you felt is not applicable or it's not logical to you? Great. Thank you, Lucia, Danny, Maria. Great. So if there are no questions, I think. Thank you, Renoir.
I think everything was clear and everything is said. So thank you.
Usually, if there are no questions, it means it's either very well understood or nothing was understood at all. So
I think it's very well
understood. Very
Stay
good.
positive بالwellness week.
Perfect. I hope you are enjoying each and every workshop and every session. I'm sure it's very interesting. And thanks to Jocelyn and all the team from my university to put this into place, because it's really very important to raise this awareness about all the topics, not only about the finance, because I think we all need this awareness from all the angles of our wheel of life. So emotional, psychological, social, financial, etc. Because yes, we are going into tough times, definitely, but it takes a lot of, we cannot surrender to tough times, let's put it this way. So we are also tough, we have also a good logic and common sense to use, and there's always a way, even if it's not the traditional way, but there's always a way to deal with the situation, and definitely not to fall into traps. It's not like if you know these information, that means you will be millionaire, or it doesn't mean that I'm a multi-billionaire, and but at least you know your limits, so you know where to stop, you know where to restart, you know how to do things. And of course, unfortunately, with everything that happened in Lebanon, not to be also over optimistic, but of course we lost a lot of money, we lost a lot of currency fluctuation, you know, due to currency, due to capital control, due to everything that happened, we lost a lot. So everybody lost during this period, technically. Some people made a lot of money, of course, but what matters is not what happened as much as what should happen next. So, okay, I lost money, fine. What do I do? So do I surrender? Do I quit? Or do I keep moving on? Whether you are living in Lebanon or outside. So some people, okay, leave Lebanon and they do a counter reaction and they go outside and they start earning better money and they feel they are well appreciated. That's great. But what do you do with your money? So what are you going to do after 5, 10, 15 years? How will you retire? So, and this is also a very good, what happened is a very good lesson to us to save the next, I would say, 20 to 30 years. Because of what is happening now, we should learn the lesson of not putting all the money in the same place, not putting all the money in the bank, with all respect to banks, but this is not, having a high interest rate by default is a high risk. So that means we should not be very attracted to high interest rates, because maybe tomorrow something will happen and they start telling people to put money again. So please don't fall into the same traps. Put money in the bank, but not in the same way we used to do it. So, so I hope everyone will make it financially. I hope you will make more money in the future. And technically speaking, maybe again, don't focus on being rich or being. It's about the balance between everything. So having more money but not having enough health, or having enough money but not having enough, or harming your family issues. So it's better to have a good balance between everything, and we'll take it from there. Great. Thank you very much. I'm not sure if I can share the presentation, but I can share with you some summary. And if you have any questions, you can we can take it from there. You can send me an email, so you will have the email, and you can take it from there.
Great. I think everything is clear now, and that would be it for today. Thank you again.
Wonderful, wonderful.
We're hoping,
thank you, everyone. Thank you, Jocelyn.
Most welcome. We're hoping to see you again soon at the university. We'll surely stay in touch, and hopefully our economic situation and financial situation would expand. And
Sure, we have to do something for it to change.
Yeah.
It will not change it alone.
Sure.
So we have to do something, and again, applying these will really make a difference, because everyone has the opportunity. If I want to close with this sentence, everybody really has the opportunity to make more money. Everybody is now success in terms of money is not really restricted to big investors anymore. So now anybody who has good ideas, who has a good skill, who has a good hobby, we are all using our mobiles. I promise you, it's been 2 years. 2 years. I'm working almost 100% online. I'm working from home, almost 100% online. We are recruiting people, we are training people, we are managing people, we are establishing businesses, we are growing things, and all being done from home, which could never ever happen 3 years ago. So I'm not talking about 30 years ago, just 3 years ago. So benefiting from the online is a must. Benefiting from the digital tools is a must. They are here. So everybody who has now, I know a lot of people to inspire you are still in university, who are still studying, and they are making enough money due to many professions or many skills or many hobbies that they have, whether teaching music or arts or translation or websites, designs, accounting, you name it, copywriting. The list is endless. Any business that you know, any skill that you have could be sold between brackets online, and you can, the good thing is you can reach any country in no time. I promise you, from my home, from your home, from same day you can meet people in Dubai, in Kuwait, in Saudi, in Saudi Arabia, in France, Italy, same day. You know, so, and if you want to work more, you spot different time zones, and you start working with people in Canada and in Australia, and so you can even work at night and benefit from making more money, because everybody needs. If you are skilled, if you know something well, everybody needs you. Everybody needs your services. So if you put the right strategy to reach these people, you can earn enough money to increase your income. And once you increase your income, we go back to this first point, don't spend it all. So start the right process from the beginning.
Okay, great. Thank you so much.
Great. Enjoy your time, and